Hey everybody, welcome back to the channel, and here we're talking about RRSPs and your tax burden. You're gonna have a massive tax bill when you die, and this is the end of the world, and you've got to do things, crazy things. You've just got to do things not to pay the tax, because this tax bill is coming and you are gonna be taken down the drain. Well, let me tell you something. This tax bill is not coming for you. It's coming for your executor and your heirs. And quite frankly, who gives a crap? I really don't. I want the largest amount of monthly income as I could possibly get, and if there's a big tax bill at the end when I die, I just don't care. And there's a reason for it. Taxes, let's assume you have $1 million in an RRSP and you're 72 years old and you just kicked the bucket. Well, your executor has to come along. Holy moly, you got $1 million in your RRSP. We have to, whatever it's invested in there, you have to put into cash and you have to transfer it into an estate account. And when you do that, okay, the bulk of that money, okay, you've got to remember, you're going to get $15,000 tax-free, and then you're only going to pay 25% on the next $9,000, and then you're only going to pay 30% on the next $50,000, and then you're only going to pay 35% on the next $100,000, and then you're only going to pay, okay, so this 48% that people talk about, you're not paying it on the whole thing. And everybody, oh, I'm going to pay $480,000 in taxes. Well, no, you're going to pay 48% on everything over 300 and, well, at the current, basically over 400,000. So, let's just say for fun stuff, the tax code changed, and when you die, it gets taxed at 48%. Okay? So $480,000 going to provincial and federal government, and the rest goes off to your heirs tax-free. I receive the money from you. I don't pay any taxes on it. It's the estate that pays the taxes of whatever they want to do. And remember, your principal residence in the house that you live in, or condo or townhouse or whatever it is, when it's sold, there is no tax, period. Principal residents are tax-free. So, you kick the bucket, and now you got to pay this big tax bill. Oh, I paid the big tax bill. Ooh, why didn't I melt down? Why didn't I do this? And why didn't I take a loan? And why? Don't ever do the loan thing. I don't even want to get into it. I'm not going to talk about it. It's so risky. I don't know anyone that does it, and the one person that was talking about it didn't do it, and another person said they were going to do it, and I haven't talked to them lately, and I'm pretty sure they didn't do it because the risk of taking it, the risk is crazy. You're retired. Why are you doing that? So this is the thing that nobody tells you that I'm going to tell you. This big tax bill at the end is not really that big. But it's $480,000. It's through the roof. The government's ripping me off. Well, just hang on a second. First of all, if you have that much money in your RRSP, you are like me, been putting it in there since you were 18 years old. I've tried to put the maximum RRSP contribution into my RRSP every year that I have worked. Every year. I don't care what's going on. I max it. Why? Because I get taxes back. And unlike probably everybody else in the country, when I got the tax return back, what did I do with it? Did you spend it? Like most people? 97% of all Canadians that put money into an RRSP, went and bought a really expensive bottle of scotch and spent it. Now, don't get me wrong, that might be worth it to you. But I did not spend my tax returns. I took my tax returns and I stuck it in my RRSP. And then when TFSAs came out, I took my tax return and I stuck it in my TFSA. It's not my money. A lot of people will say, RRSP is just tax deferred, it's not tax free. Well, you're not paying any tax on it, it's growing tax free, it's tax free, tax free, tax free until the end. So you know what, as far as I'm concerned, it's tax free. So, but I took my tax returns and I stuck them in there. So, how much is that? Well, guess what? I figured it out the other day, and it was kind of hard. I had to go way back. How much did I do the first year? Well, I did $1,200 in my RSP in 1982. Okay? And I did get back 25% of that. And then in 1983, how much did I put in? Well, I put $1,500 in. 1984, how much did I put in? I put $2,000 in because I just got a raise and I was making some extra money. But I could do $200 a month. But I did a lump sum payment of $2,000, and I wasn't smart enough to figure out $200 a month times 12 is $2,400. So I only did $2,000. The following year I did $2,400, and then the following year I did $2,400, and then I did $2,400, and then I got a raise again, and then I went, oh, maybe I'll go to $3,600. Okay, let's do $3,600. And I did $3,600 for 10 years. You get the gist of this. I just kept upping it, upping it, upping it. My income went up. I worked more, blah, blah, blah. And then for the last 20 years, not 12 years, the last 20 years, I've pretty much put $12,000 to $15,000 a year in my RRSP. Okay? And I do whatever it takes to make sure that money gets put in there. And I'm getting back basically a 36% tax return. What does that work out to? Well, if you put $12,000 in your RRSP, you get back, what is it? $4,320. Because I'm in the 36% tax bracket. As my lightning video is showing, I got bumped down, so I actually did not get that on my tax return for my RRSP this year because the tax deduction I got for the lightning for the 59 cents a kilometer actually bumped me out of that bracket because they increased the brackets because of inflation. And nobody talks about this. So, now what? Well, my total tax return to me since I started doing this, and I will continue to do this until they tell me I can't, has been, are you ready for it? $178,000. No, I'm just kidding. It wasn't that much. It was $111,852. That's right, $111,852 I got back in tax returns. And I stuck those tax returns in my RRSP and my TFSA once the TFSA came out. And it's been growing. And what did it grow to? What did the $111,000 that I've received in taxes grow to? Well, that is very complicated to fill out, and I tried the best I could. And it's doubled to $220,000. So my tax returns are now $220,000 in TFSA and RRSP. Now remember, I can only put $6,500 a year into the TFSA, so it's not equal. So guess what? I took the taxes that weren't mine, I stuck it back into the tax return, which gave me more of a tax return, and then I added that all up, and then it grew in my RRSP to $220,000. I have $220,000 I now have to take out of my RRSP when I retire. That's government tax money. I just think it's hilarious. Now, nobody does this. So if you're young, if you're 20 years old and you're watching this, set your RRSP up and do what I did. Just do $100 a month or $200 a month and just get it on automatic payment and off you go. So now, remember, I got a massive tax bill of $480,000, but the government's basically given me $220,000. Well, I don't look at that I have a big tax bill. Take the 220 off the 480. That's what I'm owing. And in the grand scheme of things, it's not very much, but I don't care. Remember, get the biggest bag of money you can, that biggest bag of money you can, when you have to pull it out. So when you pull that 7% a year out of your RRSP, plus your OAS and your CPP at 70, you add them all up. Is that the monthly income that you want? Period. It's really simple. Now, how you get there and what kind of investments you buy and what funds and GICs and all that kind of stuff. In 2023, at the filming of this video, you can easily get a 5-year GIC at 5%. This has not been around since the year 2003. That's right, almost 20 years. Nobody has been able to get a GIC, Guaranteed Investment Certificate, at 5 or 5.5%. Nobody. Everyone goes, oh yeah, you could have done it in '07. No, you couldn't have. Mortgage rates were around 5.5%, but you couldn't get GICs at 5.5%. You couldn't. Could not. Trust me. I look at it every year thinking, hey, if I can get a GIC at 7%, I'd be happy. But nope, can't do that. Now GICs are starting to become a thing again. Guaranteed Investment Certificate. You put your money in there and it pays out quarterly. Some pay out monthly, some pay out yearly. It all depends on which one you choose. The one you choose that pays out yearly, you get a little more interest. It's just how it works. So, don't worry about this big bag of money that's got to be paid out. And it should not even be a concern. You want the biggest bag of money you can possibly have at 70 years old. And if you die at 70 years old in 1 month, oh well, darn for me. I've been run over by a drunk driver at 17. I fell off a mountain. I've been beat up more times than I can think of. I've lost teeth. I've broken my shoulder. I've busted my knee. I've had a lot of fun. And I mean a lot of fun. And the beat up thing, don't concern yourselves with it. I'm a redneck. We're just talking to each other. We go buy each other drinks afterwards. Sometimes you win, sometimes you lose. It's no big deal. But I'm going to have this big tax bill. And I don't care. My spouse will receive all the RRSP and everything. There's no taxes. Just goes right to your spouse. And then my spouse will draw down 7% a year. And it's just how it's going to be. Okay? Don't worry about it. And there's really no massive tax bill. You got tax returns your whole life, and now you're paying it back. And in actual fact, the taxes I pay probably for the first 10 years is just giving back the money that the government has already given me. Well, great is that. So don't worry about it. There is no massive tax bill at the end. You're dead. Oh, my heirs had to pay the tax. They didn't pay it. Your estate paid it, and they got their money. And quite frankly, my plan is, there's a book out there that says, Die in Debt Up to Your Earballs. I don't know if its title's actually called that, but I read that many years ago. I'm gone that plan. I'm going to enjoy myself. And I hope that the money lasts as long as it can last. And if it doesn't, stop worrying about it. Because if it all dries up, you got the guaranteed income supplement. And if you live in Alberta, there's Alberta Senior Benefits. I have filled this out for years, volunteering at the Legion for tax returns. And trust me, if you're in a lodge, it's totally covered and you have money left over. So don't worry about that. Just don't worry about it. Enjoy your life. Get out there. Have a good time. Take a look at what you want for income. Okay? Take a look at what you want for income and say, how much do I got to have in there? At 7% a year pull, how much do I get? And pull it. Thank you very much. Remember, take into account how much you got to pay in taxes on everything you got coming in. As I said to someone the other day, you pull this extra $20,000 a year out, which they have more than enough money to do, bumps them into the next tax bracket, but they have more than enough to do it. And the whole thing is 79 years old, almost 80, and they want to do some traveling, and they haven't. So go do the traveling before you can't do the traveling. My neighbors across the street, I won't even get into that. So thank you very much for tuning in. I hope this is helpful to you. There is no massive tax that you need to worry about. In fact, you should be sitting there going, you know what? My estate's going to have to pay $1 million in taxes when I die. Think about that. How much is in there to give away? If you don't want to give it away, like me, I'm not giving it away. If I do, I give it early. I'm going to spend every penny of it. And I've got a plan to make sure there's nothing left at 90. And my dad is 92. So odds are I'm going to make it to 92. Nah, there's no way I'm going to make it to 92. But anyways, thank you for tuning in. Have yourself a great weekend. And I'll see you in the future having a great time.